Good morning, Jags. This is Fahad. Today is Thursday, December 3rd. Let's get started. Okay, so I'm looking for a pop in Macau casino stocks, particularly Las Vegas Sands and Wynn Resorts. So let's start off with the technical picture first. Las Vegas Sands in particular has a very nice technical setup over here. So if you look at this, you will see that this was a large basing formation, and then a news came out about potential sale of all Las Vegas assets, and the stock had a big spike on high volume back on November 9th. And then since then, it has been consolidating in a tight bull flag between 55 and 59. And this bull flag is now setting up for a technical breakout. If it does move through about, let's call it $59 per share, the stock closed at 57.61, then you will see that all of this VOP congestion will be left behind, and that opens the air pocket all the way up to $65 per share, which only has a minor VOP resistance, but that would be my first target. And then beyond that, it opens the door all the way to about $68 per share in Las Vegas Sands, which is heavier VOP resistance, and that takes us back all the way to the pre-COVID level. So look for a breakout from this bull flag in LVS. Here's another technical look, simple colorful chart from stockcharts.com. Not much to read into this, but simply focus on the volume patterns as well as the technical picture. You can see when this pop happened right here back in late October, this was on very, very heavy volume after the company reported earnings. Then a modest pullback on light volume and gap fill, then another leg higher. And as it started to climb higher, the volume continued to surge. And then this happened when the news came out, which I will cover shortly, about the asset sales. The stock had another massive spike on high volume. And then now for the last 2 to 3 weeks, it has been consolidating in a tight range. Let's see if this thing will start to pop today or by early next week as again. This morning, Deutsche Bank is upgrading all three casino stocks this morning, as well as raising price targets. That's Las Vegas Sands, that's Wynn Resorts, and MGM. If you look at Wynn Resorts chart, this has a little bit of a different technical picture, but similar thing is going on over here too. High volume pop, followed by light volume pullback, gap fill, and consolidation, and now it's attempting to break out through $105 per share. It's already up about $1 in pre-market. Now, the reason why Las Vegas Sands had such a huge pop over here on November 9th is because of this news that came out from Bloomberg, posted on October 26th and then confirmed later, that Edelson who's 87 years old, is looking to exit Las Vegas Sands completely. He wants to sell all of his properties for about $6 billion. Now, a lot of the JEC clients have been with me to many of these properties, as we used to travel all the time before COVID happened and make a lot of presentations and various investment conferences. But we're talking about Venetian Resort, the Palazzo, the Sands Expo Convention Center. All three could fetch as much as $6 billion. If now later on, a couple weeks later, this news came out, also posted by Bloomberg. This was on November 2nd, that MGM Growth Properties is actually interested in buying the Venetian Casino for the price that right where Sheldon Edelson is actually trying to sell. So I think there's a deal that's coming between the two companies. I do not know the timing of it, but I think there's definitely progress being made over here. Separately, there was a virtual analyst meeting that took place between the Las Vegas Sands CFO, as well as the Morgan Stanley and a few other analysts. And by the way, there's another conference that's taking place today as well. So we're going to get more color on this. But according to the Senior Vice President of Investors Relations, Dan Briggs at Las Vegas Sands, they talked about how the visitations and the GGR in Macau are gradually improving. The upcoming holidays, Christmas and Chinese New Year, could mark further improvements. Travelers to Macau are spending. Visitations are still at only 15% of the 2019 level. That's mainly because there is still a seven-day quarantine that you have to do if you go to Macau, as well as you still have very strict visa requirements. However, but the spending per visit has been higher, with premium mass related revenues currently at 60% of 2019 levels already. So the spending per visit is already at 60% of 2019 levels versus actual visitations at 15% of 2019 levels. When you put this all together, and this news came out yesterday when this meeting took place between the investor relations officer as well as some of the Wall Street analysts, when you put it all together into Wall Street model, there's now a consensus building this morning that the total EBITDA for this quarter could be better than $70 million EBITDA that the company posted in the third quarter. And then after that, it depends whether the growth rate in Macau particularly will continue to accelerate. Talking about the growth rate, here is the article that came out, in which was the GGR report for the month of November. This had a little bit of a lukewarm reaction at the time. This was yesterday, mainly because we saw a little bit of a sequential decline once again from October to November. However, deep into this one, there are a few analysts that are looking at the overall trend, and they're saying that back in June, July, the Macau GGR was down about 95%. Then by August, it was down 85% year over year. Then by September, it was down 80%. October improved to 75%. November was down 70%, right here, was down 70%. And now they believe that for the month of December, based on these trends, they see approximately down 60%. So the improvement is there. These numbers on in absolute manners are still very, very bad. No question about it. 60% decline is not a small decline, but the improvement is clearly there. Now down 60%. But I will mention one more thing. Remember, China was the first country to go into lockdowns in January of this year. Everything was shut down. And as a result, Macau revenues crashed down 95% year over year. We compare everything on a year-over-year basis. That's how the Wall Street expectations work. So in 2 months from now, when we are looking at January 2021 GGR data, that at that point will be compared to January 2020, which had a 95% decline. So what's going to appear optically on your screens is a potential massive spikes to a positive growth. It's all optics. And I think you're going to start to see suddenly people talking about 50, 60, 70, 80% declines to start talking about 20, 30% jump in GGR report on a year-over-year basis from 2021 compared to 2020. And that's going to be a setup for a lot of, by the way, retail chains as well as hotels and many other companies. But I'm particularly talking about casinos over here. And so the story and the optics and the sentiment around this will start to improve, in my opinion, is starting from 2021. Based on these analyst comments that are coming out, as well as these meetings and conferences that are taking place in which investor relations is presenting, there's a setup here now. And who knows, maybe a deal with MGM could be coming pretty soon for the Las Vegas assets. So there's a setup here for a technical breakout. Look for this to clear this and go all the way to $65 per share as my first target. That's it for me, Jay.
Morning, everyone. Today, looking at a company called Moelis & Company, ticker is MC. This is an investment banking advisory firm focused on providing financial advice on mergers, acquisitions, restructurings, financing, capital raises. First of all, technically, this stock has been on a nice run since the summer. But if I actually take it and look maybe like on a 3-year chart, and I'm looking at stock charts right now, really stock hasn't done much. It's sort of at the beginning of 2019, it hit 42, fell off, was range bound. Beginning of this year, hit 38, fell off, then hit 38 again, fell off. And we're now back to that same level. So technically speaking, it still has the potential for a nice long-term breakout. Fundamentally, if we look at their last earnings report, what did the company talk about? It said capital markets activity has remained substantial. It contributed roughly 8 to 10% of revenue versus 2 to 4% historically. Their restructuring related activity was the highest it's ever been. They experienced particular strength in out of court restructurings. Essentially, deals were getting resolved before the lengthy Chapter 11 court proceedings. And Moelis continues to see many companies' incomes far from fully recovered. Essentially, companies on the brink due to COVID were able to find liquidity, but it still didn't fix the structural issues that it had been seeing. So essentially, restructuring momentum continues to track positively. And I think the big one is M&A. CEO Ken Moelis noted that based on what they're seeing, it appears as though they're at the beginning of a long M&A cycle that easily could last 2 to 3 years. COVID is impacting business models, and the CEO continues to expect a lot of M&A to adjust to the evolving environment. I mean, since Sunday, what have we seen? We've seen the S&P Global, IHS, M&A. We've seen Waddell and Reed just last night get acquired.
Yep.
Facebook going after customer, Amazon going after the podcast company. And so essentially, KBW, in an industry note, also expects the upswing in M&A to continue. And this bullish sentiment, they expect to be reinforced next week at the Goldman Sachs Financial Services Conference, where Moelis is going to speak on December 8th. So we should hear more about that. And then the last thing I want to mention, and just not a huge part of the fundamental thesis, but something to keep an eye on. The firm recently launched its first SPAC, Atlas Crest Investment Corp. GMP Securities was out with a note after meeting with the company, saying that based on their conversations, they think the company has a non-traditional strategy around its sponsored SPAC, and if it all goes well, their impression is that the firm could look to launch additional SPACs on a more regular basis.
What is the timing? Any idea on the specs in terms of launches?
Let me see. So it was back in October that the first SPAC was launched.
Considering that it's right now is the moment when so many have been coming out in this area, could be pretty soon, potentially in December. And then aside from that, the second catalyst would be December 8th, right? When this
Correct,
meeting
next week, yeah.
Okay. All right. Very interesting technical picture. And, we pointed out this very briefly in the chat room yesterday. And then internally, after the market had closed, me, Jay, and Chronicle, all three were talking last night that there was unusual strength in a lot of the financials yesterday that really caught my attention. As soon as the market opened yesterday, I saw a lot of these bull flags were starting to break out. So purely from a sector standpoint, so here's Goldman Sachs chart. You can see this is a fantastic looking bull flag in Goldman Sachs and a very nice candle yesterday. This was trying to break out. Then I saw the same thing in Morgan Stanley, tight bull flag, and this was starting to break out. Bank of America, same thing, tight bull flag. This was trying to break out. And then towards the end of the day, right, we started to see some very heavy call buying take place in Synchrony Financial, SYF. So this also starting to break out from the bull flag. So there was definitely strength in the financial sector yesterday, one to watch. And now we have this play, which is a very nice technical setup on Moelis and company. And this stock is clearly breaking out. And as Jay mentioned, we have seen quite a few deal signings in the financial sector, including Waddell and Reed, that was acquired this morning for about, I believe, $25 per share or 1.7 billion. So watch this space. It looks pretty poised to run in the short term at least. Good stuff. Chronicle.
Good morning. I have a short idea today that now that the market is getting a bit stretched. Company is Harley Davidson, symbol HOG. Just to be clear, this is not a long-term structural thesis like the sort that a lot of bears on this company have. Like we've all heard the arguments about how Harley Davidson's main customer base is getting older and older. Meanwhile, secondhand market for their bikes keeps getting stronger versus new, demand for new. And also their expansion into Asia is not going very well. So we've all heard these arguments against the company before. But to be clear, these are not the reasons why I'm recommending the short. So instead, this is more of a short-term trade to capture about 15% downside. Because what I have this morning are the latest checks from KeyBank, which show that Harley-Davidson sales have been struggling in every international region over the past couple months. So KeyBank's overall numbers for the company came in at negative 18.2% on year for October, with the EMEA region further decelerating to negative 10.2%, with revenue from Spain down 41%, the UK down 36%, and France down 31%. And then if we look at South America, it's been a dumpster fire there, with recent sales down 74%, led by Brazil, which has seen a plunge of 77%. And then Asia Pacific came in at roughly negative 20%, which is shocking considering how the bulk of sales there comes from China, which has already gotten over the pandemic hump. Now, putting all this together, KeyBank is saying in their note that this worrying trend is likely a harbinger for the next few months, and this is going to hold back the company's recently announced rewire strategy. And that's really been the bull case for Harley-Davidson the past several months, even if it remains to be seen whether or not this strategy will be successful or if it's just all talk. Like the stock has been on a tear ever since management introduced this plan. So looking at my annotated chart, we can see that Harley-Davidson stock has run up very sharply and is now at a 2 to 3 year resistance level, while the RSI is now showing overbought. So I think now the bulls are starting to get a bit ahead of themselves, and at the same time we're getting these negative checks from KeyBank. So I think this is a nice opportunity to short the stock back down to support around low 30s. And if I'm wrong, it's not as if I have to put my stop very far away to cut my loss. So it's a nice risk reward here. Again, want to emphasize I'm not making a long-term secular bear case on the company. I just want to be short for a while because we're in a bull market. I think it's best to be nimble and tactical with our struts. I don't want to be short. I don't want to short and hold in this current environment.
Yeah, technical picture looks absolutely fantastic for a short case, I have to say. No question about this. Overbought in all kinds of levels, long-term, short-terms, and a key resistance. So a hard stop could be placed just above the prior 52-week high for a potential downside move of as much as 20%. And so that actually makes a lot of sense to me. Also, these checks are hideous, man. The thing about Harley Davidson is that it's unless it has a very robust and a strong new kinds of product cycle, which re-energizes its base. Even in good times, we have seen that the recreational product that motorcycle business is, generally speaking, just has a long history of struggling with the consumer discretionary spending. Anytime when it takes a hit, this company sees its sales basically fall apart, big time. And that might be happening over here as we have seen some tapering action or tapering macro data, particularly in Europe and Asia, and somewhat in the United States as well, which has quickly resulted in these channel checks from KeyBank showing a material decline again, or a sequential decline again, from September, August, September, October months to now November months. So the short case makes a lot of sense, but clearly you want to be nimble about this with a hard stop above the prior 52-week high of 41.82. All right, folks, we're going to stop over here. Thank you very much for joining, and we will see you in the chat room shortly.